Hello and welcome to Big Deal. Today we will discuss a space which is finding new ways of wider investor interest. The blend of infrastructure as well as the commercial real estate business, warehousing. And there is an existing global investor interest, and even Indian HNIs are finding the space attractive. So is this space really growing, and are we to see even sizable business trusts from the warehousing and logistics space in the future? Let's find out from our panelists today. Let me welcome on the show Yash, Gupta, the director at Soy Asset Management, Alok Saigal, who's the president and head of Nuvama Private, and we have with us Anshul Saigal, who's the MD and CEO at Welspun One Logistics Park. Gentlemen, so good to have you on CNBC-TV18.
Thank you.
Now, you know, Yash, I know you for such a long time, and you have been a big player in the commercial real estate space and the investor interest in this. How close is the warehousing space when it comes to the commercial real estate kind of returns, and why this interest building in this particular sector?
Thank you for having me back, Nisha. Thank you, and great question. It is very close. It is any income-producing assets. Commercial assets are assets which are, once you make the asset, produces an income consistently, and warehousing is probably the fastest growing part of the commercial real estate industry today. And the reason why it's so is because people are very aware of the fact that when India grows, when it goes from a 3 to a 5, 7, $10 trillion economy, there will be a huge need of manufacturing companies, of supply chain companies, of e-commerce companies, etc. And the government's things like PLI, China Plus One, etc. are only promoting the need for warehousing. But this warehousing is very different from the warehousing of the past, which is the grade A commercial global quality warehousing of the kind that Welspun One is doing. That is in huge demand. The older kind of warehousing, we don't think will stand the test of time.
All right. And it is getting more organized as a sector as well, right?
Absolutely.
So, Anshul, you've launched the second fund. You're raising funds for the second fund, which is dedicated towards warehousing. What is the rationale for investor interest in this? And what is the modus operandi of your fund?
Good question, Nisha. Again, thanks for having me on the show. I've known you for a while. So, you know, just from a sector perspective, warehousing as a sector itself is very attractive. It's a very core sector of the economy. So just look around where we are today, from everything from the clothes to the table to the chair to this glass. Everything comes from a warehouse. Everything has passed through a warehouse during a life cycle. Government has recognized the need for logistics. So we've launched a national logistics policy. Cost of logistics today is very, very high. We are losing about 6% of GDP just on the inefficiency of logistics costs. Government has clearly recognized this. We saw COVID. You know, your question is why investors should invest in this sector, because warehousing is one of the few, if not the only asset class which is infra backed and economy backed. So it's very core and integral rent yielding portfolio that you can create eventually from an asset class which mirrors real estate but is really infrastructure. So that's the long and short of it.
That's right. In fact, warehousing and logistics is the nerve center of any transaction in the country and how the economy moves. And we have seen in the past that manufacturing units have also tried to have their own service centers to service their top clients closer to the place because of the lack of warehousing in so many areas. So that's developing. E-commerce and GST has given a big push to this particular area. But Alok, what Welspun One Logistics Park is attempting to do, you have a good view of how the HNIs are now looking at it. We already have the types of Brookfield, Blackstone, who are really building up a big platform in this. But what about the domestic pool of capital that is now coming in, and the interest from a very diverse set of investors?
Sure, Nisha. Thank you. Thank you for having me on the show. So there are basically two aspects here. The warehousing space per se has been in existence because it's a rent yielding asset, has been in existence maybe for 50 years. But it has been very, very unorganized. And people would, anybody who could afford would build a warehouse, give it on rent and, find places. And that part is possibly now going away. Now you have obviously the larger e-commerce players that have come in, likes of Amazon have come in, there's a Flipkart. There are obviously, and with GST coming in, what has also happened is that outside a city center, there's a need of a large warehouse, which is basically becoming like a hub for delivering to a particular area.
Yes.
So all that has actually changed, and that is making warehouses very organized. So the first wave of this organized, like in anything that has happened in India, whether it's a commercial real estate or some of these things, is that the private equity funds, the larger players, the global players picked up this space. So likes of a Blackstone or a GIC or a Temasek, or a Brookfield, these guys came in first and they spotted the opportunity first. And therefore the Indian investors never got this organized opportunity. So they were always in this unorganized opportunity where they are building, they are finding, the tenant, and they are basically collecting, which is very neither scalable and very inefficient. And I think while Anshul is on the show, so I can compliment him, he's possibly, Welspun 1 has been the first such AIF in India, which is actually giving Indian HNIs, family offices, the opportunity to play this in an organized way. What it does is it takes care of the governance, it plays the scale, and this is also greenfield. It is not that they are basically acquiring warehouses and just refurbishing it. They're basically building build to suite.
Right.
So I think that is one big opportunity.
Yes.
The second place where again there's a lot of action, but it's not so much relevant for the larger set of clients, is the fractionalization. Again, the challenge with fractionalization is that, while there may be a quality of asset, again, it is subscale at the end of the day because it's one warehouse which you're fractionalizing. Here we're talking about a huge logistics park which you can actually potentially offer to investors, and a group of logistics parks you can end up doing tie-ups with, likes of Amazon and all, if possible, to do for a series of warehouses. So I think this is a far better route, and now Indians are getting, at least the HNIs are getting access to it.
So Anshul, it's a development model that you have.
It is, yes.
And it is very different from the listed logistics companies, warehouse and logistics companies that we already have in existence. So the HNIs, the retail, in a way, the higher net worth retail participants can have a piece of the pie straight from the development of the warehouse, and then they can get the benefit of the return mechanism that comes and which kicks in after a sizable work has been done, or it's commercialized or rentalized. That's what you're focusing on. What are the return matrices that you're looking at?
Yeah, absolutely. So imagine, you're seeing all these REITs today in the market. You're seeing the Embassy REIT, you're seeing the Mindspace REIT, the Brookfield REITs. These are fully developed office parks or IT parks, which are stabilized, rent yielding. So all you have to do really is collect the rent. And what this vehicle does is it passes the rent to an investor who can invest as little as potentially 500 rupees, right? So they've dematerialized real estate effectively, right? You don't need to now go buy a 5 crore office. You can go put in 5 lakhs if you have, the comfort to do that. Similarly, what our fund does is goes a step forward, or if you look at it, a step very early in the journey, where it's a full cycle development. So this is, imagine you got an opportunity to invest when these guys were buying land and building these office park and signing up an IBM or a Microsoft or a Cognizant. What we're doing is giving investors an opportunity in a dematerialized format to invest in a full cycle development. And the beauty about our model is that because we're integrated, fund and development, the investors do get the full cycle return. We're not passing on a developer's margin back to the developer.
So there are two ways of looking at it. Either you catch it at the inception and you get the full benefit of the returns. And you also take equal amount of risk if you get in so early in the stage. So there are two ways of looking at it, and the HNIs who are putting in, they know their...
That's why you need sophisticated investors. They understand that they're taking
They know the risk parameters.
And the minimum ticket is 1 crore that people put in.
But what's interesting about what Welspun 1 is doing, and taking on the point that domestic investors are involved, many of the risks, whether it's on the land stage, whether it's on the development stage, etc., are very local. Which require local expertise. So very often the foreign funds, the foreign participants who want to do this don't like to take these risks. But there is substantial value that gets created when you take a piece of land, when you get it converted, when you get the approvals, when you make a warehouse, when you rent it out in that situation. So what is interesting about this is there's local expertise and local management, which is using local money to create significant value, which then becomes marketable to anyone global or local, for that matter.
That's right.
And that's how the whole full cycle is getting completed, which is a new thing for the market.
But you know how the foreign investors have been investing in the commercial real estate.
Correct. Yeah.
And now building up their warehousing portfolio. What is the difference? And are they taking less risk? They are basically backing either the developers or they are through inorganic route beefing up their portfolio.
So I think it comes in all sizes and all shapes. So there are some international developers or international funds who are okay taking the local risk of development themselves, but there are very few of them. And even there, they will tie up with someone local, either a local team or a joint venture of an international team with a local team, like an Indospace, who would want to do that. But the majority of them, if they can get access to large-scale warehouses without having to take the risk, like a Blackstone has when they bought Anshul's old portfolio from Embassy, etc. A lot of them prefer that because they're saying we are in the business of the yield, of the rental that comes in, not in the business of development.
Right.
So both are there. I think there will be more FDI trying to buy warehouses than to develop it.
All right, so that's the difference, and those are the various pockets of investments and investor categories which are interested in this space. But ultimately, it is the return metrics as well as the exit opportunities that the investors will look at. We'll come back on Big Deal and we'll discuss exactly that in the warehousing segment. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are discussing the investments that are going into the warehousing sector and what the future is in terms of the potential of returns as well as the exit mechanisms. And Yash as well as Alok and Anshul are right here in the studio with us. Now, we were discussing the various aspects between, international investors. Now, HNIs are looking so keenly at it. So, Alok, what is the return parameter expectation, considering that we already discussed the development risk is being taken by the HNIs?
So there are two aspects here, Nisha, that we should see. So if I see a completed warehouse, and hypothetically, if the warehouse is grade A, and it is going to a grade A quality tenant like a Amazon or a Flipkart or Mahindra's, then the rental yield is 7 to 8% at best, 7% more likely, and so that is the thing. So at 7%, nobody is interested at taking it. But if you are able to tie up with, say, an organized player, and therefore people are, when they're taking the development risk, the option is that am I able to make something between 18 to 20%?
Yes.
Now the beauty is, if you do it yourself, you have to do all the getting the approvals, processes, bank loans, land clearance, everything, and then finding the tenant. And why would an Amazon talk to you, an individual? Amazon will not talk to an individual. And reason I'm using Amazon's name, because they've been in recent times they've been the biggest users of warehouses.
Yes.
So that's the reason. So it becomes very inefficient to get that 20% plus. Now, moment you come into a fund structure, all these things are taken care of. There is an organized way of doing all these things. And the return expectation does not get tempered down, because yes, you're taking the development risk, that will also take individually, which the HNIs are willing to take. They understand land, they understand India. So if you are getting that 18 to 20% return, being in an organized player, where you can participate in the size and scale, I think that is the beauty. And as Anshul was mentioning and as Yash was mentioning, you see it as a pre-REIT or a pre-InvIT fund. Now today, you have so many REITs and InvITs that have got listed in India, like an Embassy or a Power Grid and all. Now they are trading at an X price, but the developer has entered obviously at the early stage. And even if you look at a Blackstone entered an Embassy at a pre-REIT stage.
And they made a killer return.
They made a killer return on that.
That's one of the biggest.
Exactly. So the idea is the same opportunity.
It's the same opportunity that you're looking at.
Yeah.
And are you really betting on some of the entry barriers to this particular sector, which not everybody can deal with, and especially the very political and sensitive place of land acquisitions?
Yes. Oh, my favorite topic. It's my official title should be land buyer and not managing director, I feel sometimes. But that's the area of the business which is the most complicated.
Yes.
That is also the biggest risk when we look at a project and underwrite a project. Now, land in India is a complicated topic.
Yes.
So there is very little any government can wave a magic wand and fix that overnight, just because of the way land is originated from our history in India. Remains the number one challenge, to be very honest, but also for a company like Welspun, it's the number one opportunity.
Yes.
Because we're so good at it. We know how the world operates.
Yes.
We know how to buy land. We don't take aggregation risk.
Yes.
We have a very rigorous investment committee, which is, by the way, independent now. It's a very highly governed body that takes these calls. So for us, it remains a big opportunity. But for most people, it remains the biggest entry barrier and the biggest risk. An area of land acquisition is when people start to getting the Superman mentality, and they start taking unusual calls in terms of buying cheese holes or buying pockets of land which may not develop.
Yes.
I don't think we would ever do that with investors' capital or our own capital into a fund.
Yes.
So we pay a significant importance on due diligence, clearing it. So, for example, in the West, we work with a DSK law firm or a Wadia Gandhi. In the North, we'd work with a similar.
No, it's a
law
lot.
firm.
It's a lot of work to get a clean.
It's a lot of work. It's a lot of work
in India.
Yeah,
absolutely.
Even for us now, it's a significant amount of our time goes into that.
But that could be a USP for a developer, local developer.
Yes, it could be.
Yeah, and that could really take you long in that particular business.
Absolutely.
So Yash, what do you think about the exit opportunities? So from whatever I've heard, it sounds like a pre-read and wit kind of a scenario. What are the exit opportunities that you see?
You know, the interesting part in this is because of the growth story that we are talking about, right? I think the exit opportunities, what we have today, will only multiply in the future. The standard ones that are there is the minute you have an income-producing asset or a rent-yielding asset as a stabilized warehouse becomes, you can sell it by warehouse, each warehouse by itself, whether to an individual investor or to a company, or you could sell it to a REIT, or you could become a REIT yourself, or you could even become a listed company if you want to, and if you want to institutionalize the business and just become a development company. So what the beauty of the business, the domestic business that Anshul and the Welspun Group is leading, is the fact that they have all the opportunities the international guys have, and some opportunities which the international guys typically don't have in that case. And the international guys love it because the international guys are saying, listen, we want to place billions of dollars of capital, but we can't go out and buy billions of dollars of land. So if a Welspun one is comfortable doing that, let them go out, buy the land, let them build the warehouse, let them get the tenant, and we'll just buy the entire portfolio out and give a huge return to their investors.
Right.
We are happy because we want to place a lot of capital. They're happy because they make a lot of return.
And just to add to that, just 7% return even for an international takeout capital is escalating at a 5% per annum. So on a 5-year window, it's a 12% unlevered return. If you lever it, even that, and then of course the REIT has an appreciation story and all of that, it's still a very good 14-15% return mechanics after the juice has been removed on development, right?
But it's definitely more beneficial than a proper IPO or a listing.
Yeah, so the IPO or a listing in our space would effectively be a listed REIT, Nisha, which we would probably never list the company, right? But the listing, the major benefit of listing is liquidity. So if it's a listed instrument, then say, tomorrow if Welspun One does do a REIT in the future, or any other platform does do a REIT in the future for warehousing, you can now put 500 rupees and invest in the warehousing return, and then 6 months later, if you don't like it, you can sell it. Right?
Yes,
I think that's the biggest.
Liquid.
And it also it depends on how large is the listing and what kind of investors you want.
Of course.
So if it's a large listing, which is what Welspun One will probably be aspiring for, then those investors, which are typically international investors, are saying, I don't want to get into an IPO of a listed company because the money then stays with the listed company. What they will do with it, I don't know. And the value of that listed company's stock is based on its future earnings. I'm not sure of all that. I much prefer a REIT where I know exactly what I'm buying into. I know I'm getting distributions every year from that. It is very tax efficient for me, and I'm not at the risk of the promoter reinvesting that capital in the future. Right. My capital comes back to me.
So that cash distribution that is done by REITs and InvITs is one of the big pull factors, and also fixed income combined with equity gives a lot more investors.
Yes.
And that's the best way to explain it. It has the benefit of a fixed income and yet the upside of an equity.
All right, so it looks like that logistics and warehouse is going to make a big way into REITs and InvITs eventually, but it has to reach a critical size for that to come in. And the entry of HNIs into that investment is also giving a lot of positivity in terms of its growth path and building in terms of scale. All right, thank you so much, Anshul, Alok, as well as Yash, for this riveting conversation on all the aspects of warehousing and logistics and the investment there. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.